Hello, guys. Once again, welcome to my stock analysis show. My name is Joseph Ejike Oji, and as always, today I'm going to show you how you can make money by investing in stock. I always say this, stock investing is a good way to make money. But if you are thinking that it is a get-rich-quick business, it is not. I must say you the truth. The only way you can get rich quick from stock investing is if you have some insider information that nobody else has, which is illegal. Or maybe you're just lucky. Like one of the companies that you invested in experienced significant growth, which lead to the sharp and big increase in the stock price within a short period of time. Like one of the companies I analyzed a few months ago, NVIDIA, it was trading at, I think it was trading at about $400 per share when I did an analysis a few months ago. Now let's look at the NVIDIA now. See what is the stock price for the company. So it is now, okay, I think I choose NVIDIA. Yep, NVIDIA. So if you look at NVIDIA now, it is now trading at $846.71 per share. When I did the analysis a few months ago, it was about $400 per share. So this can because it experienced significant growth and it makes chips. I mean, it is involved with AI, ChatGPT. So it is not the only company that is involved in that, but it did. And 4 months later, it have doubled in price. So that is the only way you can make that kind of money, either through luck. I mean, one of the company that you invested in just experienced significant growth, and then which made the stock price to double within a very short period of time, or that you have insider information that nobody knows about. That one is illegal. Let's say that you have information about that company is about to be acquired by another company through mergers and acquisition, and you bought the stock, and then it triples. It can make it very rich. It can make you very rich. But then if it is found out and it is proved that you got that information from an insider inside the company, you can go to jail for that. The good news is that you can create your own inside information by doing what I'm just telling you now, doing some kind of analysis of the stock, the company's financial statements, and then making a decision to buy and hold it for the time, which is how most people, even Warren Buffett, that's how they make money. They analyze the company, buy the stock, hold it for 5 years, and then sell it. Warren Buffett can hold the stock for sometimes 10 years before he sells. And he's always beating the market. I'm showing you here how to create your own insider information. That one is not illegal. It is pure legal. So anyway, today, the company we'll be analyzing today will be this one. It's called AerCap. AerCap. Now, let me make sure you're seeing this. So AerCap is actually it is actually the full name is AerCap Holdings NV. It is an American and Irish aviation company, and the headquarters is in Dublin, Ireland, but it has offices around the world. So it's a multinational corporation, as a matter of fact. Excuse me. Now, AerCap Holdings engages in aircraft leasing. They lease aircrafts, and also they're involved with aircraft, aviation finance. So a big company that make aircraft can take a loan or buy on credit for them. Now, the AerCap Holdings also provide aircraft owners, financiers, and investors with asset services so that they can manage their aircraft portfolio. Now, my analysis of this AerCap holding stock will be based on four things as usual, actually. The company's income statement, balance sheet, cash flow, company stock market information. So what I'm saying, what I mean here is that information that I'll obtain from these four areas is what I'm going to use to analyze AerCap Holdings stocks. Now let us go to where we can find those informations free of charge, okay? And it is in no other place than from Yahoo Finance. So let's go there and put the symbol for the company. It's the AER, the symbol, AER. You can see that it pops out, AerCap Holdings. I will begin by looking at the moving average for the company's moving average. As you can see, today, which is the April 19th, the stock is trading at $83.74 per share. So let me look at the chart and then put the moving average there. So on these indicators, I'm gonna put moving average, choose moving average. And I'm gonna look at the 2 years. Check it for 2. You can see that for the past 2 years, for the past 2 years, AerCap Holdings have been trading above the, you can see this red line represents the moving average. They have been trading above the moving average the past 2 years. They make it 5 years. It is it still hug the moving average. For the most time, it is trading above moving average. Only for this section where it went down, the stock value went down, but then it bounced back. And like I say, for majority of the time, it is trading above it moving average. Now, when a stock is trading above it moving average, it is a good thing. And like I said, AerCap did that. As you can see, for the 2 years especially, the past 2 years especially. So this typically suggests that the stock of AerCap stock, AerCap stock has a sustained buyer interest and may be perceived as bullish in the longer term. So for those long-term investors, this could be a positive sign because it indicates that the stock is maintaining an upward trajectory over an extended period, which often instill investor confidence. Now, remember what I said, if you are the kind of person that buy today and sell tomorrow, then this show is not for you. This show is only for people who are disciplined, who want to analyze the company, look at the environment, and then make a decision to buy it and hold it for at least 2 years or 2 to 5 years. That will make money. Remember, if you're buying today and selling tomorrow, sometimes you make money, or you're buying this week and selling next week. Sometimes you make money and then you don't make money. Sometimes you make. So we add all your profits and all your losses. You see that you're not really making much. And besides, each trade you make, you have to pay the transaction cost, and they add up to a big amount. Plus, at the end of the year, IRS will come for your head for tax, to pay the taxes. But if you don't sell your stock and hold it over the years, you won't pay any tax until you sell it. That is the only time you pay the capital gain tax. So, long-term investment that involves value investing, if you are the kind of person that does that, then this show is for you. Anyway, let us continue. Let's look at other things about AerCap Holdings. Because we can't rely only on what the chart is telling us. Look at some statistics about the company. That means we're going to be looking at some of the items in the balance sheet and income financial statement. Not all the items, just the ones that we need. Let's start by looking at profitability. You can see that profit margin is 41.4%. and operating margin is 53.13%. Yeah, this profit margin of 41.4% is exceptionally high for this company because it indicates strong profitability relative to its revenues. And also, such a high profit margin suggests effective cost management and a robust business model. Now, the operating margin of well, in a similar vein, the operating margin of 53.13% further underscores operational efficiency and reflects how well AerCap Holdings is, how well it manages its core business activities, apart from its financing costs and taxes. Now, at this point, we can now look at the management effectiveness, under which we'll be looking at the return on asset and return on equity. AerCap's return on assets is 3.43%, and it indicates how efficiently the company's assets are being used to generate profit. So this figure of 3.43%, I mean, is positive and is reasonable for a capital-intensive company like AerCap. So in the capital-intensive companies like this, a smaller profit, a smaller return on asset of 3.43% is reasonable. Especially a company in the aircraft in the manufacturing industry or servicing industry. They're usually capital-intensive industries. Aircraft manufacturing, aircraft leasing, all these companies, that kind of company, even utility companies, small profit margin of that return on asset of 3.43% is reasonable for such companies. Now, the return on equity is 19.2%. Is very strong, and it demonstrates that AerCap is effective at generating return on shareholders' equity, and which is very attractive for investors, especially the long-term investors. Okay, at this time, we are ready to look at the income statement. The revenue is 7.57 billion. So that's the total revenue. And coupled with a year-over-year quarterly revenue of, say, year-over-year quarterly revenue of 5.4%, this shows a stable growth trajectory to AerCap, suggesting that a steady demand for its leasing services. Okay. Now look at the EBITDA. So the EBITDA of 4.09 billion also highlights strong profitability and the company's ability to generate cash from its operational activities. See? And net income, which is net profit of 3.14 billion, this is net income that is available to common stockholders. And it aligns with the high profitability margins that we have discussed before. Okay, 3.14 billion. Okay. Now I have the earning per shares of 13.78%. Is a basically it means that the earning per share for each share is $13.78. That's what it means. $13.78. Right? What is called diluted earning per share. $13.78 is high, and it typically signals, it is basically a signal that, a signal of strong earnings and financial health. And then the quarterly earnings growth of 123.4%. Oh my God, that is good. That is not, I mean, it is really it is remarkable. It is really particularly remarkable, and it indicates significant improvement in profitability. Now, let's take a look at some few items in the balance sheet. Got a total cash of 1.76 billion. So AerCap has 1.76 billion in cash. And there's substantial, see, you can see right here, and there's substantial 46.66 billion. 46, total debt of 46.66 billion in debts. So the high debt level is there are characteristics of leasing industry. I mean, like I said, they are capital intensive. So why? Because I mean, it's high for them, usually high for those kind of industry because they require significant capital outlays for asset acquisition. So the debt to equity ratio is 281.25%. It is considerably high, and it reflects heavy use of debt financing by the company. Where it is common for capital intensive industry like AerCap Holdings. Yeah, it is really typical for them. It is common in that industry, but it could be a risk factor if not managed properly. Now let's look at the current ratio. It's 1.62. That means that they're actually managing it properly. That means for every 1 cent they have, they want once every $1 they have as debt, they have $1.62 to cover it. So if they say that they have 1 billion in debt, and that means they have 1,620,000,000 to cover it. So they're actually managing. I mean, this I have a seeing this debt ratio, I can breathe a sigh of relief because it looks good for this company. Okay. Um, so let us continue. We have look at the cash flow analysis, cash flow statement. We have the operating cash flow of 5.26 billion, which shows strong cash generation capabilities for this company. And this is essential for meeting financial obligations and reinventing the business. However, this levered cash flow of negative 2.17 billion can be concerning. It's a negative levered free cash flow of negative 2.17 billion. It raises concern. It suggests that AerCap Holdings, after accounting for interest payments on debt, less cash is available for shareholders and further investment. Maybe that could be why they didn't pay dividends. Because when we are looking at the time we are looking at the company's they call it moving average or the chart, we didn't see any evidence that they paid dividends. And we can even look at it from here. After when we look at the stock movement for the company, let's say that if we look at the historical data for this company, let's see. I look at the historical data here. Okay, I'm gonna make it. I mean, it shows the stock price over time, and I'm going to make it not daily, make it monthly, and then make it apply it for the current period. Okay. Yeah, so this is monthly. Okay, you can see right here. You can see that there's no evidence of dividends being paid. So I can see why from this, what you have here for the negative, there's a negative free cash flow, levered free cash flow. So, but other than that, everything we learn about this company looks good. Everything looks good. As a matter of fact, I am confident to say that AerCap Holdings, the company's AerCap Holdings' strong profitability metric, stable revenue growth, and competent management of asset and equity. The stock, given all these facts, the stock appears attractive to long-term investors. But the potential investors should consider the high leverage. Yes, high leverage. Personally, I always okay. Give me 1 minute. What happened to my okay? Okay. Personally, I lost my script there. Let me put it this way. Okay, something happened here. So personally, I'm always concerned about debt, high debt, because a company have high debt, they may not be able to get more money to do a new project that will add value to the company. But this one, apart from the negative free cash flow, as a matter of fact, many companies have negative free cash flow for a long time if they are growing, you know, so they are expanding and growing. But every other thing looks good. As a matter of fact, I'm ready to make my final conclusion about AerCap Incorporated. Is it a buy or a sell? Well, is AerCap holding to buy or to sell? I would say buy and hold it because it's going to rise more. So my final conclusion is buy it and hold. Buy and hold. Okay. Then hold it for 2 to 5 years. And I'm confident that it will appreciate in value. I hope you enjoyed the lecture tonight. Thank you for listening. And I'm going to see you in my next lecture when I will analyze a new company. Thank you. Have a good day.